investor doing things on your own? How about someone working with a firm that isn't so responsive or in sync with your investment philosophy? My podcast talks you through all things financial. Look, there's stuff you don't deal with very often, but investments, insurance, and retirement is something we plan for each and every day. This is the Pennywise Financial Podcast, and welcome to the show. All right. Welcome to the Pennywise Financial Podcast. This is Constantine here at Monarch Wealth Management. And today we're going to recap a few things about where we are so far year to date and kind of taking a walk backwards down memory lane to find out what's been happening, what's been drawing some optimism as well as some skepticism on which areas to place your money in the market. Right, so let's take a look at the Dow Jones Industrial. The 1 month return on that's about 1.5% down. A 6 month number over 6 and change. And so far this year, about 1.5%. That's as of early this afternoon. S&P up about 0.5%. One of the big ones so far year to date. If we think about the numbers in different sectors on where to go. The top performer has been energy. Surprise, surprise, energy. That's up 25+% so far in just under 3 months here so far year to date. How about the worst place? One of the worst places to be invested, and that would be in the cryptocurrencies. That would be in Bitcoin, down almost 15 and change. Right, so one of the more promising areas in the past several years, with last year not doing so hot, and this year so far not doing so hot either. I think the 1 year number on those are down about 30 and change %. Not a very good place to be parking your money, thinking it's similar to cash or gold, because clearly it's not. Real estate is positive. We have the Russell 2000 that's positive. Those are the smaller companies, smaller names. Energy up. Real estate is up a little over 8% there. And another big one, another big spot, kind of a shining star, if you will, is gold. Yeah, so gold, precious metals is also up. How about the, we think about the U.S. stocks, and we'd say that they've had a pretty good run so far in the last several years. And people are growing, at least their concerns are growing, and saying that, geez, these stocks may be overpriced. They're overvalued. They're not making as much as they're trading for, and their price-to-earnings multiple has expanded so much that I'm not sure it's going to continue at this pace, at this rate. Should I be looking elsewhere? Well, if you went into foreign stocks and foreign equity, you're up almost 7% so far this year versus our S&P 500 that's now positive, but it wasn't just a week or so ago. So what's happened during that time frame? We're going to hope to unravel or unbow some of the things that have been making the market change. So what happened last week? Well, we had the State of the Union address. We also had the Olympics wrapping up. The USA teams did quite well, and we celebrated for that. So let's talk about the State of the Union. And everybody has the right to their own opinion. I watched it myself with my family, my wife and my son. I will say I wrote a blog about this, but my son, just the day prior, kind of unusual, unexpected for us, and it was a pleasant surprise, but our son kind of grabbed our hands and said, Mom, Dad, let's grab hold together and let's pray. Let's pray for our family, and let's pray for the world. Had his eyes closed, his hands kind of grabbing firmly on us, and we were like, wow, what is this? And it did bring some joy to my wife and I. Were kind of surprised by it, and it was so random. It was a random act there, and brought us some smiles. But a day later, we did watch some of the State of the Union address together as a family. And I did hear some of those faith-driven conversations talked about especially as we've seen different things unravel. You think of the COVID times and what happened during that era, which was shutting things down, where any type of group gatherings like that was frowned upon. So it was nice to hear that that is on the rise, despite many years of faith and family values somewhat declining. So I do think it's important to touch on some of the things that were discussed in the State of the Union, what it means for your money. Obviously, the one of the things that was mentioned, and I've had clients come in and ask me about this, is what is this Trump account if my child was born in these years where these benefits would kick in and trigger, if you will. Well, obviously the message is touting these quote-unquote Trump accounts, officially a 530A investment account, essentially is what it is. And that was created under the One Big Beautiful Bill Act. Any children that were born between 2025 and 2028 will receive $1,000 in federal seed funding, which is nice. It's $1,000 to get the kids started, and families will be allowed to contribute, looks like up to $5,000 annually, and that money grows tax deferred. In addition to that, there is a massive new proposal to give private sector workers a match on up to $1,000 a year for retirement savings as well. So this is quote-unquote free money with an investment in either your child or yourself for retirement. I think this is good news. The areas where I'd say it's a bit gray and foggy is what are the details? When can the money be pulled out? What kind of investments can I expect? What are the fees? Where do I open the account? How do I put money in? How do I take money out? So a lot of questions. Right now, as far as I am aware, we are not able to open these types of accounts here on our platforms, but they are available. There is a website we can make a link to so that you can have access to that and find out more information. So if you had a child born between those years, definitely want to look at taking advantage of some free money to get those kiddos started. Let's see what else was important on here. It talks a little bit more about some of the details, 18-year tax deferral, tax compounding. Maximizing these 530 accounts could result in a nest egg of quite a bit of money by the time the child reaches 18, especially if you max out. There's a couple other ways that you could do things similar to that, but you will not get the $1,000. So if you have a child born during those years, certainly take advantage of that. If you have questions about it, certainly reach out to us, and we'd be happy to help guide you, although it's not something we can do directly for you here at the firm. Okay, tariff tug of war, right? The tariffs that were causing some unrest, some anxiety with a lot of investors early on in the president's new term. Well, there was some issues with the legitimacy of that, I guess the legality of that, and it has been challenged. And the Supreme Court ruled that there were some issues with what was happening. So how do we unravel a lot of this? Well, the Supreme Court recently blocking the broad-based tariffs and the agenda, the president decided that he would double down. He vowed to bypass Congress using older statutes like the International Emergency Economic Powers Act of 1977. He made a bold claim that tariffs will eventually replace modern income tax system. Well, I don't know if I believe that completely. That may be a bit far-fetched, but he's quite optimistic about the thought and premise of this and the revenue that it will bring to the country. Supply chain squeeze, I think we're still seeing a little bit of that. How about energy and the requirement for energy and energy sources, different types? We talk about nuclear. We talk about a couple different stocks and sectors that have benefited from a lot of the optimism. I think we're still years away from seeing revenue come from that. But I think that we can all agree there are going to be higher demands in the coming years for energy. You talk about things like AI and cloud computing, A lot of people are storing things in the cloud and on the internet now versus keeping hard files at home, whether it be floppy disk, CD-ROMs, or even USB storages. So I think there's going to be a higher demand for that, as well as you think about electric vehicles. It's not just electric cars. They have boats. They have all kinds of sources. So we're going to be looking at different ways, whether it be through solar or wind, and different avenues, I think. Not just the production of energy, but the storage as well. Energy paradox, obviously, we look at cheap gas. Oil prices have been on the rise since the announcement of the war that started in Iran. And that happened after the address. So we definitely want to look at some of the energy infrastructure and refining, not just the exploration. We want to look at different areas and sectors for our clients, and those are some of the things that you may want to be thinking about. And so the State of the Union, I think, made me smile in a way because it rang home, true to home. When I think of some of the things that did happen as a result of it, we did have the men's Olympic team that was present there for the address, which was fantastic. My son is a hockey player. We spent a lot of time at the rink and traveling hotels and with hockey families. So it was nice to see them announced and recognize their 40-plus year break where we have not won the gold. And obviously this being a predominantly Canadian sport, it was nice to see that the men and the women were able to bring home the gold. Pretty big feat. They fought hard to do that. It was exciting to watch and to see them recognized there, as well as first responders, a lot of American heroes and former troops that served and veterans that were awarded a variety of different medals from the president himself to be recognized, and people overcoming some of the challenges throughout life was nice to see. We did see some bipartisan support there, but I think the overall message was positive, with some ability to feel excited about what's to come next. So I think that's the common theme that I wanted to focus on. Again, with my son seeing one of his favorites, Jack Eichel, on the men's Olympic team being recognized there, in addition to many, many others, I thought it was a great sight for the family to enjoy. That's my take on the State of the Union. I'm not going to get too political on that. I think most of my listeners know where I stand at this point, but we want to cut through the noise and focus not on the politics, but on what will happen with the economy, the results, and the places that we want to be investing. Okay, so let's talk about this rotation of stocks. We mentioned after the State of the Union, despite a lot of positive commentary we heard, optimism through way of interest rates, inflation, getting a better handle on the economy. I think that things are starting to change. We're seeing some costs go down, costs of things like food and gas. Well, prior to the war starting, were good indications that we're headed in the right direction. Now, the rotation, talking about stability on the surface, you think of what most folks are seeing and hearing on the news and on TV. Markets are looking like they're taking a breathier under approach where money is moving at lightning speed, right? So in the past couple of weeks or so, we see the market starting to slip. Matter of fact, S&P and Dow Jones were down for the year. They have since recovered and headed towards positive territory, which is something we like to see. The AI and tech revolution, and some of those stocks were heading south, right? And I think the momentum is starting to slow. We're starting to see stocks outside of that core sector breaking out. And those are the things that we do want to see. We don't want to see just a focus on 2 or 3 or 5 stocks making up 20% of the S&P 500 and having those run. Oh, the macro whiplash, tariffs, taxes, and growth. How about a reality check? let's acknowledge the 43-day government shutdown. I have some clients who were stopping contributions, looking at different ways to survive during that time without getting a paycheck, although they will be recovering that money, right? During that time, they were wondering what was going to happen. How will they feed their family and pay their bills? I know there were some efforts included in that, but in many cases, the bank, you have a mortgage and you need to pay for it. You have property taxes, you have to pay for it, despite there being this government shutdown. How about the Supreme Court's decision to block broad-based tariffs? Well, that certainly caused a lot of angst and anxiety for people thinking about where these sources of revenue will come from. You think of providers that will operate, or that do operate, I should say, across the pond, right? So you have international-based companies that are now facing tariffs. You think of automakers, you think of parts and whatnot that are generated outside of the U.S. and brought in, import tax, and now you have to either eat that cost as a business or you have to pass it along to the consumer. And I'm sure most of that was, at least was tried by many companies to be absorbed internally if they could, but eventually they had to pass some of that on. So I guess, how do we unravel this? I think we have to look at what will happen in the coming weeks as far as resolution. I'm sure there are a lot of companies. I heard a few big names that were suing the government now to recoup those costs and expenses that they had as a result of these tariffs. So we'll find out what happens there and who will be paying for that. Silver lining. How about the latest data? March 4th, UCLA Anderson forecast showing the U.S. economy is actually poised to re-accelerate. Again, re-accelerate. Something I'd like to see. Continued growth, minimize the inflation, keep that at bay, as well as the unemployment figures. Those are big areas that we want to focus on. How about the rotation? Explaining that capital, obviously, it's not leaving the market. It's just kind of changing where it's being invested. We saw a surge in small cap companies. Now, why is that? Why do we see these smaller, typically the smaller companies will do well as we come out of a recession. In a way, they tend to be more volatile than the large cap companies. They didn't participate in a lot of the appreciation that we saw in the AI market, but some of these smaller companies with lower rates to borrow from, right? So when they're borrowing from the banks and whatnot, that will definitely help. Talked about Big Beautiful Bill, energy surge, obviously the late February military strikes in Iran pushed oil prices up higher. I saw that at the pump. I put in premium. I pay anywhere between $3.50 to $4 a gallon, and it does depend on the market I'm in. Halfway between Rochester and Buffalo, if I stop at in Batavia at a gas station, I'm paying close to $4 a gallon. So it does depend on your location, even within the same state. So some things to think about. We did see a surge in energy, about 20%. So that did push numbers up quite a bit. But the real estate shift, mortgage rates are now at a 3-year low. We may want to get a real estate broker on, or mortgage broker, to talk about some pricing and what we're seeing here in the market. It's been a little while since we've had somebody on last. So what's going on? Let's look at the large cap stocks. They're cooling down, heating up. Small caps, value type stocks, the boring play. As a matter of fact, I wrote a blog article a couple weeks ago talking about how boring is beautiful again. And energy right now is on fire. No pun intended. Global markets cooling down. Mega caps, we mentioned those big names, the Magnificent Seven, if you will. A lot of the companies that were booming the last several years are starting to cool down. And heating up is international markets, thinking of different specific countries. You're looking at Japan, South Korea. In real estate, Sunbelt and coastal markets starting to slow down a bit. I notice we have a property down in Florida looking at the areas always for something else to pick up, and prices are coming down. Heating up is the Midwest and the Northeast. Macro drivers, obviously, we have tariff-driven panic. People are kind of worried, wondering what's going to happen. Heating up are tax cuts and consumption. So I think those are some of the important things that we're thinking about as we look at rotational shifts out of the Magnificent Seven and AI-heavy focused type stocks. What else do we have on the plate here? Let's see here. Another area we want to talk about when we think of war, and we know what happened just a week ago after the address. It's not even actually been a week, has not been a full week just yet. But the concept, the idea that one might want to invest in a lot of the aerospace and defense type stocks might be a very valid point when you think about the costs and where the shifts on spending, especially here in the U.S., will go. You have to imagine that we're going to be spending more on defense, and that is true. You think of companies like Northrop Grumman, Palantir, RTX, Lockheed Martin. Some have local offices here and a presence. We have some employees there. The initial surge. So let's look at Northrop Grumman. Up 6%. Palantir up just shy of 6%. RTX up almost 5%. And Lockheed Martin up 3.5%. So there are definitely some key drivers right now because of this bombing that we have going on in Iran and this war right now. Who knows how long it'll last. I think the current administration is thinking weeks to maybe a month or two. It could be longer. I know a lot of times these wars start out, like Ukraine. The mission may be somewhat short-sighted. We might have a very short runway, and things tend to persist longer than we expected. They cost more, not just financially, but in the form of lives lost. So that's a disappointing part. But this graphic here is trying to illustrate a couple of things. Number one is in the upper left corner, 12 and 24 months. Obviously, if we think of the aerospace and defense, you do see things take off like a rocket ship. And it does leave behind the S&P 500. And I would say that's already starting. Again, some of the big names we mentioned there in defense, the RTXs of the world, the Palantirs of the world, the Lockheed Martins, they're starting to take off. I think as we hit the 24-month timeline, we start to see a shift and a slowdown in things. And by year 5, the S&P 500 ends up toppling. So the top 500 companies, the broader market, ends up beating the aerospace and defense sector. So I think you want to consider that to be more of a short-term trade than an overall positioning long-term. And again, there's no guarantee that will continue the way it has happened before in the past. You certainly have some tailwinds for these types of stocks. I know that the budget in defense, matter of fact, where are the numbers here? The U.S. defense budget for 2027 is a staggering $1.5 trillion. That is 50% more from the $901 billion approved in 2026. Obviously, this is going to signal Wall Street. Defense spending is becoming urgent and uncontroversial. It's going to provide a multi-year tailwind for these types of companies, regardless of how the Iran conflict is resolved and how quickly it's resolved. So I think it's important to consider all those aspects when you invest, whether you're doing it on your own or you're having a conversation with myself or one of the other advisors here at the practice. You know, it's a part of what we're doing. Again, you're not going to allocate 50% of your money into stocks like that just for the sake of or concept of tailwinds. The reality is that's going to come down to earnings. At some point, the price to earnings multiple, the trajectory at which things are growing, price to earnings multiple, and what people are willing to pay for those stocks in the given environment. Those are all the factors we consider as we move money around, reallocate, rebalance, in addition to some other things. You think, geez, why didn't we blow out of my my defensive type stocks and go into aerospace? And why didn't we cash out of my AI stocks because you said that the momentum is starting to slow? Well, if you sell all the winners in a non-retirement account, you're going to have a nice hefty tax bill from the IRS and or New York State or whichever state you live in. So we want to be cautious of that. We certainly don't want the tail to wag the dog. And I'm sure you've heard that expression if you've met with me or one of my colleagues before. We certainly want to protect a gain. You have a 50% gain, you can square up on taxes, and that's a 50% gain minus what you've paid on the IRS and state tax. When you pay those bills, you're left with a profit. If you hold off because you're worried about paying taxes and that 50% gain goes to a 50% loss, you're going to have a very different outcome. So we want to be cautious of that. I think those are some of the things that are on the hearts and minds of our clients right now. State of the Union. This is the second year of the president's new term. We're starting to see some things unravel a little bit as far as inflation numbers. Tariffs obviously are going to be on the front of our minds right now as we think about things and repositioning in the next several weeks. So keep those items in mind. We're in March, and the State of the Union was given at the end of February. The warmer months are headed our way. So despite the rising energy costs, I'm hoping that those will be offset by warmer weather and a more mild climate for all of us, not only on the financial side of things, but from a weather standpoint. I think that's all the time we have for today's show. Thanks again for listening to the Pennywise Financial Podcast. We'll see you next time.
You've been listening to Pennywise Financial, brought to you by Monarch Wealth Management. Constantine and David really care about their clients. They want to make sure you're happy, so you'll continue to hire them. There's no commitments, and clients are free to leave whenever they want. Think about being able to pick up the phone and call someone for guidance and advice on almost anything, from buying a car, selling a home, buying vacation properties, or even selling a business. Reach out on the website at monarchwealthmanagement.com. There are 2 offices in Rochester and 2 offices in Buffalo. Reach out to us on Facebook, LinkedIn, Twitter, and YouTube, or call us toll-free at 800-480-1580. That's 800-480